What's going on, everyone? Welcome back to another video. In this video, I'm going to be doing a trade recap with the man himself, Austin Silva. So for a lot of you guys that know, how are you going, Austin?
I'm living, bro. I'm glad to be here. This is like an exciting reversal of roles for me. So this is good. I'm glad that we're here and I'm ready to bring the value.
I'm actually pretty pumped to do this.
Yeah.
So pretty much, for most of you that follow me, the system I trade and a lot of the knowledge and my approach to the market has been taught from Austin. So with my previous experience of trading, coming in to AceFX, it's just a whole different approach and perspective on how to read the price, how to read the market, and just gauge and be reactive. So it'll be really kind of exciting to kind of take you guys through this trade recap on EURCAD and kind of show you my thoughts and how simple the analysis was going forward and just pulling the trigger on this trade.
I love your recaps, Jerome, and I love your videos. I think everybody does in general, not just because you bring value in the information that you share, but the way that you talk, I think for a lot of people, it's super easy to understand, even when you have a slight accent. And even when we're talking about complicated topics, like the way you vocalize, your vocalization is very proper.
Appreciate it.
Yeah, absolutely, bro. So let's get into it.
I can get really passionate about it. And the same with you. Like, I love it.
Right.
Really
you get fired up and then we'll start screaming. Exactly. You know what I'm saying? Yeah. So that's there too, for sure. Yep.
Yeah. That's all right. So let me share my screen.
As you first get into this, the pair we're looking at, you said, is EURCAD. This is coming off the bank holiday on Monday. We had President's Day, which I'm not really sure why that's even still a thing, but it is.
Okay. Maybe
in like some future, world where we evolve past our small problems. Now we stop having President's Day because it's just kind of a silly holiday. It's silly to have a bank holiday, in my opinion. But we're coming off this bank holiday, so you come in the next morning. You're also trading EURCAD. Did it scare you that you had a bank holiday the previous day, or were you like, no, this is not even a USD pair? Like we're rocking and rolling.
Yeah, exactly my thoughts. I was like, USD bank holiday, Euro pair, and I was just like, the setup presented, so I kind of just pulled the trigger on it.
Makes sense.
And in my opinion, like it was just one of those setups that you just had to be in. And like I was saying earlier before we started the video, it was a small risk, and it just perfect trade how it played out.
So tell us what went into this first here.
So obviously coming into it, just a bit of AceFX lingo. We look at the indicator, TDI indicator, which is the trader's dynamic index, and that kind of gives us market sentiment, which direction we should be looking at to trade. And then obviously looking at just simple price action, it was kind of pretty bearish the day before. So I was carrying that bias into the day I took the trade.
Yep.
So before we jump into the technicals, this is just the kind of recap. So it wasn't pain-free, but once again, for the guys that have been following me, I've been doing a lot of back testing. So I was able to kind of just keep my hands steady and just kind of play through that drawdown and just walk away from my desk and let whatever happened happen.
Do you find that works more often than not? Like, does it work for you when you set a stop loss and then it comes into drawdown and then you walk away? Because I find that difficult for me. Like, if I go into drawdown, I'm thinking like, do I need to get out of this trade? So what gave you the confidence to just leave the stop alone and say, okay, let's go?
Great question. So obviously emotions play a massive role in your trade outcome. If I'm actively watching that trade, you just start over analyzing it and you start finding reasons why you should be getting out. So once again, Austin kind of gave me a tip to kind of just get up, walk away. I set alerts on TradingView, so you can set alerts, and if price hits a certain point, it'll trigger you, so I know to come back and then check what's happening. But once again, I trust where my stop loss is based on the system, so it should hold that. If it doesn't and my stop loss gets hit, then I don't want to be involved and I look for a re-entry.
Makes sense.
But when price, it was a slow day for EURCAD, so price was moving slow. So as you can see, just over 4 hours in this trade.
For only 18 pips.
For only 18 pips. If I watched it for any longer, I would have actually pulled a trade once it came back to that 50 EMA.
Right.
So walking away and just doing some other work was kind of the best way to,
handle the trade.
Distract me from over managing, pulling the trade. And from past experience as well, like I have trades where I've pulled it because price has reversed on me a little bit and gone into a bit of drawdown. As soon as I pull the trade, price goes in my favor.
Of course.
And I feel like that's worse position to be in emotionally and psychology because, you know you shouldn't have done that. You're not following your rules.
Dude, I mean,
So
I have many
think,
examples of situations where like I've pulled myself out of a trade, and I think
yeah,
you might have even seen maybe one of my markups recently, and I talked about this one at my last live event that we did. In the markup, I
yeah,
literally I wrote closed some here in profit, and then in under that I was like, stupid, why did you close some here? There's no exit signal. Like, this is dumb. So I
yeah.
can relate. I can
I think I
relate.
remember
But
that markup. Yeah,
there was one thing I wanted to point out with this too that I noticed. You have a very clear level of support set at yesterday's low with those two pins to like 153.75. Is that where that is? On
yeah.
yesterday's low. Go back right before the Asian session. Oh, it
Back
goes
over
back
here.
even further. Yeah, no,
Yeah,
up a little bit. You see it right there under the ADR line.
this one.
Previous day, right there, right there. Yep, the low right there. That's it. Those pins. Yep. So I'm looking at that and I'm seeing that overnight. It almost like hits it. It
Yep,
bounces higher, hits it again, bounces a little lower, hits it again. Yep, right in there. See how every time it bounced off it
yep.
as you go left to right,
It
the
came lower and
bounces were
lower.
smaller. Yeah, the bounces were like, oh, it can't get off of it. Oh, it's going to actually go under it. Oh, we're under it now. So notice how
Yeah,
you come under it and then your trade actually comes off of that level, which I just think is really
exactly.
interesting to see.
And
Yep.
once again, just kind of just some overview on this. Like, I still want to do a video. I think we should do a video on indicators because I still get a lot of hate. But look where price pulled back to after it broke this zone that Austin was just talking about. Look where price came back to the 50 EMA
50.
and then
Yep.
fell from there.
Yep.
Retest, like, couldn't break it,
Yep.
came down, broke that level, retested it here, and then it just fell away. To me, price, we still read price action, and I still take price action and like levels into account when I'm actively trading.
For
but
sure.
not as much as I take the EMAs because there's zero subjectivity in it. It's either rejecting an EMA or it's not.
You know, it's funny you actually say this, Jerome, because I'm going to film a video this Sunday. I don't know when this video is going to come out on your channel, but I'm going to have one up on my channel in a couple of days. Just like a basic EMA training video, because I think a lot of people don't understand the math behind them. So I did some basic research, found the formulas. I'm going to explain it in simple man's terms, because then you can understand those EMAs are just gathering the data from price movement and painting an average. And because we're using EMAs, it's actually weighing short-term data more heavily than the older data. So it's really recent, which is what we need for day trades, you know?
100%, especially because we are holding these trades for like less than 5 hours.
Sure.
EMAs are a perfect tool to kind of get that data, that dynamic support and resistance, where you can react to, like Austin just saying, recent price. So what has price done recently? So when price action does come to these dynamic lines, you can see on the chart here, you can make very solid trading decisions and get very solid trading signals depending on what price action and the candles do.
There's one more thing I want to mention too, Jerome. You said that this didn't move much, where you only grabbed 18 pips. The move itself down to ADR, ADR I see is only 56 pips. Dude, you go back like to last summer, ADR on this pair was like 90, like literally 40 pips more, double the move that you traded here.
Yep.
You know?
Yep. So yes, exactly like what Austin just said. I pulled about a total of just over 18 pips out of this trade. Once again, like I had my target set for 3R, so all the way out to ADR low, which is the average daily range. So it calculates the 5 previous days, and then it will average it out on our trading day. So it's just a measurement for where we should be looking for profits, or where we should kind of not be looking. It creates risk to reward, basically.
So if you only got 18 pips out of it, how come it fell 38? Where did you end up getting out of it?
So I got it at 1.5R. So because this was once again, I was in the trade for like over 4 hours.
Yep.
Here in Sydney, I was probably about 11:30 p.m., like approaching midnight. And
tired.
I was just really tired.
Eyes are getting closed.
I already had my stop loss legs locked in profit, so it was a risk-free trade. I had 50% off at 1R.
Okay.
And I just set my take profit at 1.5 and went to bed. So once again, we never know what's going to happen in the market.
For sure.
We could have rebounded, took me out for a small profit, or like it did in this example, it went straight down to ADR and then just kind of consolidated down there at 3R.
Do you ever find that like these consistent bags where you're catching 2R out of a 4R or 5R move, how do you, like, what is the analogy that you use in your mind when you think about like how to compare them to something else? Like for me, it's always like free throws. Cause like in a basketball
Yeah.
game, we've got 3-pointers and layups and, you know,
Yeah.
mid-range jumpers and all this stuff that gets you to the end of the game where it's like 99-97 and the Bulls are up by 2. Where
Yeah.
it
Yeah.
comes down to at that point is who's going to be more consistent in their free throws. And I feel like when you have a system, it's kind of like taking free throws. You know what I mean? Like
Of
what was
course.
Kobe
Yeah.
Bryant's free throw percentage? You know, super, super high over his career, you know? So it's like
Yeah.
you want to be like Kobe Bryant in that sense. But do you have any other analogies that you compare it to help you understand that better?
So basically, like with taking partial profits, or
Kinda,
like,
yeah, sure.
I mean,
Like how do you maybe here's a better way to frame the question. How do you be okay? Like that's why I didn't say it this way because that sounds stupid. How do you be okay with the fact that you only got 1.5 R out of it and it fell 20 more pips?
honestly, I think I'm a very, as you know, I'm a conservative trader. And
Sure.
if I think taking any profit out of the market is a win, in my opinion.
For
Better
sure.
than taking a loss. I'll take what I can when the market gives it to me.
Yep.
And I still get asked, I can show people a lot of back testing data coming back to taking partial profits. And they will always argue the point that you're skewing your risk to reward long term. You're leaving money on the table. And yes, we are, but the profitability is actually not that different taking partial profits or letting the trade run to hit your targets.
Right.
So in my opinion, I would rather secure the bag, take a little bit off the table, lock my stop. That helps my psychology. It helps my well-being, and I can come back and focus on the trade knowing that, hey, you know, I'm risk-free. The trade's played out. I've got a little bit. I'm cool. Whatever happens next
It's
happens.
like that
I'm not
survival
too concerned.
mindset.
Exactly. Yeah. And I think as well, like, I think it's foolish to just let a trade run and not secure it, because I've seen
Yeah.
multiple times where these trades can just reverse on you and hit your stop loss.
Popcorn.
So
Yep.
you could,
Turn right around.
yeah, and you could be up, 1.5 R in the
And
money,
then you're down
celebrating.
half R in
Next
a second.
minute, something will happen and they'll reverse
Yep.
and take it. That I've had that happen multiple times
Me
previously
too,
to
bro.
me.
Everybody has. Yeah.
And
Of
it
course.
it's so draining because once again, trading's so kind of emotionally based, and you
Right.
really kind of, it's hard to detach yourself. I mean,
Yeah.
you got to master yourself to this point where you don't care what happens, but at the end of the day, you still care. Like it still takes a
Always.
massive hit.
Always. One other thing I wanted to mention for this before we go on with this trade, and you've brought up back testing a lot already in this video. I want you to make sure you link to the 2 back testing videos we did on my channel so people can go watch that. Because even the guy that I was just mentioning to you, who I had a one-on-one with today, he had seen our back testing videos and it helped him a lot. So with your back testing, for everybody in ASFX that's watching this and listening to this, they're going to look at this trade and they're going to say, well, there's no bullish divergence, Jerome. So that's good. So that's why it makes sense for you to not even have that drawn. But the first thing that everybody's going to see is what? That it's still in the Asian range. It's still in this range where you could think coming off a bank holiday, it might stay in that Asian range all day and be choppy. So we can't trade it till it breaks out. So what in your back testing helped you take this trade? Can you explain that to us?
Yes.
And you can be as specific as you want. Like explain the shift candle and the testing and all that, please.
Basically, entry candle, which is the shift of the 8 and the 21 EMA. With a candle formation, basically what happens is when you have a candle formation that's overextended, so this obviously overextended is the definition of the biggest candle of the trading day.
Biggest body, not wicks.
Biggest body, not the wicks, exactly. So the biggest open to close. When that happens, more times than not, if that candle breaks out of the Asia range for the first break and makes a new low or high, depending on which way you are trading, it will 99% of the time always reverse and hit your stop loss. But if you are taking an overextended candle and it doesn't break, so it doesn't break below here, which is the Asia range, you can see with this candle formation here, it comes down, pins it, but the body closes back in that Asia range, which is that white box here. More times than not, you'll get a pullback, but it will never hit where we put our stop loss with the ASFX A1 system. And as you can see, price just came back down. And with my back testing, I also measure. So every time I take the trade where I put my entry, my stop loss, I always measure the drawdown. So as you can see, it was 11 pips in drawdown. I will actually track that metric as well, and I average it out over all the trades that I log in my back testing.
What are you finding that the average one is going into drawdown? See,
It's
that's
about 10
interesting.
pips.
Yeah,
It's
that's
about 10
interesting.
pips.
I'll challenge you on that one too, because I'm like, well, Jerome, now you did your testing during this what period of time, right? Like, let's just for examples here, say you did your testing of the first 6 months of 2020 last year, right? What if ADRs during that period were smaller? And your drawdown at that point would then be smaller. But then we get into the time period where GN is running 220 a day. The drawdown there is naturally going to be bigger, wouldn't it?
Yeah, exactly.
Yeah.
So
Okay.
once again, that's why I'm grabbing the average of it all and then
Makes
seeing
sense.
over a period of time.
Yeah.
So the average I've got on like EURCAD, Euro Aussie, Euro GBP, GP, JPY, Euro USD, GBP USD is about 10 to 15 pips. So when this pulled back, I just know that it's going to pull back. This is the average pullback. So the reason I'm tracking that metric is so when I'm in the live market and the market does pull back, I can be patient on there.
That's great.
This happens.
That's
so
a great
I think
idea.
that was one of the metrics. I mean, because one of the biggest problems, and when I say to people when they're back testing and they ask what parameters should I track the parameters that will help your psychology and emotions in the live market. So
that's
for
a great way
me,
to put it.
when I enter a trade and it starts reversing on me, I wanted to know what was the average. So when I do take a trade in the live market and it does happen, I know to myself, hey, this could pull back 10 pips, 15 pips. And then I know I can just kind of sit back and let the trade do what it has to do.
It gives you that. So by tracking that metric of drawdown, which is new to me, bro, and you didn't tell me that till now. Like that's new that we really didn't spend much time on in the videos. But if you track that, it, like you said, will actually make you more confident. If you get a signal, a proper trigger signal, like here you have the A1 shift candle. If you get a proper shift or trigger, then you should trust the stop. Even if you go into 8 pips of drawdown, so to speak, whatever the drawdown metric is, if it's lower than that average, that could actually help you stay in the trade, which is a huge piece of it. Because I literally, like I said, just got off a call with a guy today, and he was saying to me how he's pulling himself out of these trades, and then they go in the direction that he thought it was going to go. And I feel like it's always lack of confidence to him. And it's funny when you talk about this, when we give people advice in our coaching session, we both tell people, where do you gain confidence? In back testing. In what we're talking about. Yeah. So if you're back testing properly and you do it like you do, which I think you do an exceptional job at it, you look at it from every angle and you're like, okay, which metrics do I need to be tracking that can increase my confidence just by tracking this one metric? You know what I'm saying?
Yeah, exactly. So every time I track it, I'll just measure from my entry to where it pulls back, and then I'll just keep a total log of each trade of what's happening and average it out. Once again, it just comes down to confidence. I think with trading, and I always say this a lot, when we take a signal, we know the signal can move, especially with the A1 because it's kind of bouncing around and it uses momentum in a way. So when we get these entries, we can see a follow through for about 1R to 1.5R. Yeah. But reality is we never know what's going to happen. Like we are literally putting money into a live market. And I think once again, it all comes down to psychology and emotions and how we handle ourselves. And like Austin just said, with confidence, you need it. You need the confidence to hold through these drawdown periods and let the trade play out. Give it time, give it room to do what it has to do.
We're going to have to beat the horse dead on this, bro, because there's just not a lot of traders, especially younger guys like us. All the guys our age are all lifestyle marketers. The guys that are really trading, no one's really talking about backtesting. Backtesting is the thing that makes you gain confidence in a system. If you don't even have a system, you don't. It is work, exactly. But it's like a lot of people don't even have a system, so they wouldn't even know what to back test. Got to remember that too. Yeah,
exactly. You don't just start testing random signals. There has to be consistency. There has to be rules. You have to have it defined. You have to have a whole kind of mentality and approach that you'll consistently do every single day, and then apply that into your back testing and apply that consistency into your daily routine and in the live markets.
I got a question for you, Jerome.
Go on.
How do you deal with FOMO? In a situation like this, the fear of missing out would be you seeing this signal present and then it starts to move in your favor. How do you deal with it? I guess you already kind of answered part of it where you have the FOMO of the part after you're already out of it. But is there any fear of missing out before you take the trade? Are you ever aware of that emotion at all?
Definitely. I think, I mean, with Euro USD, there was a signal that presented yesterday, but it was invalid. And once again, deep down, like I knew it was invalid, but I wanted to take the trade. And that just comes down to following the plan and you got to get rid of emotions and your opinion in trading. Like I knew that Euro USD will come lower, like you don't know, but I just had a strong bias, a bearish bias on it. And it dropped from that entry. But once again, it wasn't a valid signal.
Yep.
So I don't think you can ever eliminate emotions, FOMO, fear, greed from trading. And I think
you can just be aware of them.
Yeah. And I like as traders, like we literally just click a few buttons, but it's the most hardest thing to do. And I don't think a lot of traders understand that. Like you're saying,
wait, Jerome, you're telling me trading is hard? Trading is not easy? Like I can't just make a bunch of money from my bedroom?
No, I mean, pulling profits out of the market, yeah, you can take a few trades here and there, but doing it consistently, following a process, sitting patiently, sitting in your hands, watching the market, it's freaking hard. Like it's hard, and not I don't think people talk about. Yeah, like it's easy to say, you can make more money sitting in your hands. Oh, you gotta have patience. Like you can read as many quotes as you want, but until you actually practice it in the live market, it's really hard.
Right.
It's really hard.
And I think with all of that, it's like it takes finding your own edge in order to not only keep you confident, but I think keep you consistent. So what do you think this trade here reinforces for you within your own edge?
It just following the plan, following the process, being consistent in what I do and what works.
What part of the process? Come on, give us more specifics in that. What part of the process?
Part of the process would be daily routine. So showing up at the exact same time every day.
Has that been a struggle for you?
No, because once again, the system fits my lifestyle. So I find it very easy. The approach to showing up at the same times every day, consistently Monday to Friday, is very easy for me. And that just comes down to finding a system. And I always say this, like 95% of the systems you'll find online work. But if you can't trade it consistently or doesn't fit your personality or lifestyle, you're not going to be profitable.
Or beliefs. Yep. Or beliefs.
Exactly.
That's where I like that word. We got to start using that a lot more. Just talking about
for sure.
People's beliefs, because I think, like you said, there are a lot of winning ideas out there, but if it doesn't align with what you underlying think about the market, that wasn't good grammar, but you know what I'm saying? If what you actually think about the market deep down and where that's rooted in and what that comes from, if it doesn't align, then you're not going to be able to trade it profitably. And I think it's taken me too long. Like, bro, we have almost 1,000 students in ASFX in a year and a half. And I'm just realizing that now, that because I want to help everybody. That's my problem, and I think you can relate to that too. You want to help everybody, teach them what you've learned and share that experience with them to shortcut their learning curve. But you have to realize you can't. And part of that is, like you said, this system aligned with your beliefs, and the back testing reinforced that. And that's why it's working well for you. So here's a good question for you. When you talk to new traders or people that are just getting into trading, what's the first thing that you tell them they should do? The first thing they need to do?
Well, the first thing, understand the system and make sure it fits their lifestyle. So when traders approach me and say, what's the system you trade? How do you trade? Can I get more information on it? I try and tell them the realistic truth about it. Like, it's a decent system. It's profitable. It's easy to manage. It's systematic. It's rules based. I think every system should have that baseline and foundation. But you got to be able to incorporate that into your daily lifestyle. If you can't actively watch the 15-minute charts, I actually tell traders that are interested, like, you can trade on the high time frame, but it's tested and proven on the 15-minute.
Right.
So I kind of give them some insight into it, but every trader that I tell, I try and kind of turn them off a little bit, because unfortunately they're coming from other areas, from social media and all the ads you see of making it sound easy. And the truth is it's not. So I try and just kind of give them a bit of a reality check, really.
And you said specifically, you tell them to find a system. When you tell people to find a system, you mentioned a couple of things that a system should be. I always want to add that a system has to really detail specifically, what are you entering on? What is your entry trigger signal? What is the stop loss for that signal? What's the way that you're going to read potential reward with that signal? Just that's a good start, right? It needs more than that. It needs a risk management plan, a grading system. It needs other things. But if you don't have a trigger signal and a way to measure risk reward, it's not a system. I don't care
It's
what you
not a
say,
system.
no, you
You're
need a
entering
trigger.
blindly. Yeah.
Exactly. So, and it goes back to what you mentioned a few minutes ago about Euro USD, where you had a bias, but you didn't end up getting a trigger signal. So you couldn't take a trade just because you had a
Exactly.
bias. And I feel like that's another area that people struggle in. But here you proved that even through that like balancing act that you were mentioning with the emotions of wanting to trade,
Yep.
but not wanting to break the rules, it is a balancing act. You were still able to come in and pull the trigger and execute well here. And I think part of the reason for that, and this is one of the last things that I need to mention, is just the detachment that you show from the trading. Not detachment in the sense that you did a good job of going away from your desk and letting it do its thing, because you did. But I'm saying like you judged yourself here, I think, and I saw your notes on it as you were posting about it in the coaches chat in the Discord, but you judged yourself based on your performance, not based on the outcome of the trade. And I posted about that with my trade today. I think judging ourselves as traders via the performance that we did towards the rules, not the outcomes of the trade, especially in the beginning when you're first getting started and first trying to find a system and get good and get consistent. That's a big, big thing, you know? So you really, look, if this would have stopped you out, you still would say next time I'm taking this trade, right? You would take this again?
Exactly. And that's a perfect way of saying it. Always ask yourself, would you take this trade again and again?
Yeah.
And I would, because it's the system, it's systematic. We know what Austin exactly was saying. We know our entry signal, we know where to put our stop, we know where to take profits, we know how to manage it, we know how to grade it. It's a whole kind of process, and we can follow that process following rules. And that's, I think, applying that is just, I think, the key to success for sure.
My last question for you. With this trade starting your week pretty well, pretty solid, what do you do to stay on track the rest of the week?
Great question.
Don't just tell me follow the system, because I know that's always the answer. But give me, like, what are you doing for yourself?
That's
like today,
the simple answer.
But today, like, what did you do today? You pulled yourself off because you were like, "Yo, I'm kind of tired. I'm not feeling it. I'm done. You know, I need a break. I'll come back tomorrow."
Let's give the honest. I think we should give the honest.
Yeah, we need the honest answer, bro. Come on, no bullshit.
So you take a win. Yeah, okay. You follow the process again, rinse and repeat the next day. But honestly, it's hard work, and it's harder work when I take a win, because honestly, my ego gets in the way, and I'm like, all right, let's make some more money today.
Of course.
And I go in the market with this hot head thinking I'm on a high. And reality is, when you do pull money out of the market, you get this rush. And you shouldn't, but it's like I say, emotions will always be there in trading. So what I have to do to prepare myself, instead of just following the process, I now need to I got to like meditate for a bit longer. I got to be more mindful. I got to come to the charts with a fresh approach, and I really got to focus myself and pull myself back down and be more humble and follow, like I was saying, follow the process. But not just that, I got to be on top of my game. Otherwise, I'm going to slip.
And because that ego wants to come out and flex on you, bro. And
exactly.
Be like, yeah, we won that last trade. Let's go again.
We're going to get it.
Right.
Yeah, and like Austin was saying, like your performance to the charts and to yourself is separate. You can't define, your trading is not you. But a lot of people associate that. And I want to go on Instagram, I want to do stories with like cool music in the back and then showing people I'm in profit. Like, you got to be humble. Like there is like the ego always kind of creeps in, and I'm guilty of this, but you got to, like the truth is, you got to pull yourself down and you got to be humble, otherwise you're going to slip. And I always do it, and I always shoot myself in the foot where I'm on taking a winning streak and I get cocky, and then I just take a trade I shouldn't be in, and then I'm giving back profits, and then you just go in this low, and it affects your psychology and your emotions, and you make more mistakes. So I think when you take wins, you got to make sure you're keeping yourself in check. You're not getting, yes, it's part of following the process, but it's a lot more than that. It's about kind of being mindful, keeping a level head, keeping yourself sharp, and just discipline. Like discipline is such a massive thing in trading. Once again, it just comes back to emotions and how you control yourself.
I think it's more of like awareness of emotion rather than trying to ignore it. You know, that's what I said before. Because I think if you're aware of how you're feeling, then you'll know on a day like today, after that win, look, I'm not feeling it today. Let me pull back. I don't want to give back this win on something stupid. Or in the same sense, when you're feeling egotistical and you're like, yo, I'm the fucking man. I won this trade. Like, let's go. I'm going to kill this next trade. You can, hey, I know I feel that way, but really, is this a trade I need to be in? Like if you can just let that logical brain outweigh the decisions that you make and not let that emotional side of your brain drive the decisions, then you're in.
Yeah.
You're going to be okay. You know, you should be able to survive. But it's when you allow that side of your brain with the emotions, whether it's the left brain or the right brain, I don't know. It's some part of your brain.
Yeah.
It takes over and it lets you jump into a trade that you didn't even need to be in. And you're trying to call the bottom of GU when GU is clearly in a downtrend and coming lower. So like, what are you doing? You know what I mean? But we've all been there. But that's why I think people find so much value in these trade recaps. And I think that's why people appreciate what we're doing so much, because they can relate to what we're saying. We've all struggled in the same boat. No one is any more special than anyone else. We're all the same.
Mm-hmm.
We all struggle with the same basic issues. And it's funny because everybody thinks they're so special, bro. But when it comes to trading issues, we're all the fucking same.
It's amazing. I mean, especially with AceFX, we're all following the same system. It's great that people are adding their own touch, which I encourage people to do.
Sure.
But at the end of the day, people are taking trades that set up and some people aren't. And that's perfectly fine. Be selective, but it's crazy how everyone can see the same system, but see the charts differently. And that just comes through, I don't even know, like it's an amazing experience to see how people view it. And I think that's one of the biggest things I love about ASFX as well. Like how we can see the same entry signal, the same system, the strategy, and we can all bounce ideas and see how the different perspective all the traders in the group can see it. And I think once again, comes down to the biggest learning curve of my trading journey so far is just surrounding myself with that. People
that push you, but also people that want to see you do well. So no, I love it, bro. You got anything else for us on this video? I think this has been a good one.
I mean, not like it's been a bit of a recap on my trade, but I think this is more value in hearing the process, the emotions, what goes into it, the outcome.
You know, it's all like the trades are like a variable in the equation, but this other stuff that we always end up coming back to is not so much like it's a constant. If the trade setup is the variable, the shit that's always there is constant. It's this emotional battle that we have to deal with. And that's why it's important to still talk about, you know. Some people will tune it out and those people will still struggle with their trading. Other people will listen to us and try to apply what we're saying or interpret it in a way that they can apply it. And I think those people will continue to see growth and continue to push forward. And that's why we're doing it, bro. That's why we're here.
I think the traders that watch this video to the end, we obviously appreciate you guys giving us our time, but we're not flexing. We're not showing P&L like this. The stuff me and Austin and a lot of the guys in AceFX and the other coaches, Lindsay, Ryan, like trading is boring. Like it's nothing exciting. Like, yes, what it can offer is exciting, but the process of trading, I mean,
it's boring and hard.
Trade, going to drawdown for 2 hours. I mean, that's not exciting.
No.
You know, but that's why you got to have the discipline. And what we talk about with psychology and back testing and confidence and putting in all this work behind the scenes, if a lot of traders can implement what we say, you'll see a lot of success and improvements in your trading performance. For sure.
I love it. Thank you for bringing me on, Jerome. I'm glad to be here.
No worries. Thank you for your time. This will be awesome. I hope a lot of you guys get some value out of this video. And appreciate it.
Make sure you subscribe.
Yeah, make sure you subscribe. If you got some value, please smash the like button and hit the bell icon as well so you get notified for any future content. Once again, we appreciate your time and I'll see you in the next video.